is the Next Level Loan Officers podcast. To learn more about Next Level Loan Officers, go to becomnl.com.
Hey, this is Frazier with Lead Pops and Next Level, and I'm proud to present this episode of the Next Level Loan Officers podcast. Lead Pops is the industry's only future-proof growth solution. You can check us out at leadpops.com.
Welcome to the Next Level Loan Officers podcast. I am Brett May, not your usual host today. KT and the guys are out today, so I'm going to be covering, but I've got a really exciting guest with us. Quinton Harris is the VP of Northeast Florida for Bank of England Mortgage. He's consistently been the number one branch in the organization for over 6 years running now. And he's doing some things in our business that I've really never heard of. And he's going to be sharing those with us here in just a second. And something about Quinton too, is he's got his own podcast as well. So I want to introduce Quinton, bring him in here and share a little bit about what's going on with him. Welcome.
Hey, man. Thanks, Brett, for having me. Glad to be here. Excited to be on the show and appreciate your time today.
Yeah, absolutely. And tell us a little bit about your podcast first. I know it's called What's Your One More, right?
Yeah, that's the name of it. What's Your One More? That's with the number one. What's Your One More? It's on all platforms, Apple, Spotify, Amazon, Google, you name it, YouTube. We do videos as well. And all social medias, our handles are at What's Your One More with number one. But the ideology behind it was that, been doing this for close to 22 years, have met a ton of people in the game, and they've been gracious to kind of be on the show as guests. And then over the last 7 years, myself and a couple of my colleagues, Daniel Halverson and Alex Stewart, have formed a group called the Market Distillery, where we are able to kind of break down all the noise that's in the market and also localize that information and able to kind of give accurate forecast over the last 7 years to our market that people can't find online. And, with all the noise in the industry, sometimes you hear some things. We always like to describe it like, you're in a classroom and there's a classroom average, there's a bell curve. And let's say the average is like a 78. It doesn't mean the 98 didn't happen, right? Mm-hmm. And we want to be the 98 in that situation for our market and be able to deliver that kind of accurate information here versus getting average information about what's going on in the whole United States. So our podcast airs on Mondays and Wednesdays. We drop 2 episodes a week, and we've been doing this since about mid-October, and it's been really great and fantastic. And we've picked up a lot of coverage from that to the point where we think we're going to start doing more stuff in other local markets for the podcast as well.
Yeah, and it's kind of more consumer financed focused, right? Like I know you're kind of talking and your message kind of resonates more with consumers and also mortgage professionals and real estate professionals as well, right?
Yeah, Brett, our goal is to not have it. We don't want to be boxed in at all in our podcast. We want a lane that's wide open where everyone can be a part of it. So as we're doing the shows, one of the things we always ask ourselves was, hey, listen, if I'm a general consumer listening to this, what can I take away from it? Like, how can I apply it? And can I digest what these guys are saying? And if I'm a real estate professional or a loan officer, like one of the goals we want to do is be able to give you some advice to go apply immediately to your database out there. And how can you use that in the market? And how can you separate yourself from the competition with the message? And so that's one of our goals that we look at every single time.
Uh-oh.
I was just kidding. I didn't have technical issues. Actually, I did, guys. I'm sorry I'm late to the podcast. I told Brett, man, I threw him in the deep end and said, bro, you're just going to have to learn how to swim, son.
Man, he's killing it, man.
I put my life jacket on and I, blew into the little red tube on the side and we're off and running.
More like Michael Phelps, man. It was pretty good.
Yeah. So Quinton, you run a branch Northeast Florida. Tell us a little bit about that.
So I joined Bank of England about 14 years ago. And like a lot of people in 2009, you were kind of searching for where you were going to land. I ran my own mortgage brokerage operation. And, during that time, man, it was a different era than what we're in now. And the broker world itself was consolidating. And so Bank of England was looking for a presence here in Jacksonville, Florida. And we were able to meet up and just, really lucky. It was just right time, right place to meet them. So we've been here in Jacksonville ever since. And, we entered here at Bank of England. A lot of people were, calling about exchange rates on, pounds and things of that nature. But it only took about 2-3 years for us to get some market penetration and the name established. And it's been really good ever since. And we focus a lot of our business on purchase, resales, and we have a couple of builders that are nationwide builders that we're preferred lender with. So that's helped us kind of keep our footprint in the builder world. Like everybody in 20 and 21, our refinance transactions crept up to around that 20-25%. But we've been very purchase centric, and that's helped us, in my opinion, stay through the 2022, 2023 era that we've been through right now.
Yeah. And you're someone who's very, I don't want to say hyper local, but you're a big presence in your area. And that's really kind of where that Market Distillery came from, right?
Yeah. So, in our area, we're the number one non-owned lender, like non-affiliated. So like we're not owned by a builder. We're not owned by a real estate company. And when you look at all the transactions, we're number one in all of that category. And I think the reason for that is we're very diversified in how we approach our business from the standpoint that we rarely talk about products. We rarely talk about rates. I think everybody has the same product. Everyone's within range on the rates. So to really kind of value separate ourselves and provide value to the market was what can we do? And so bringing that market data and giving advice to a loan officer that you're trying to recruit, or giving advice to a real estate agent that's looking like, what else can I do to improve my business? I always think it's interesting when a loan officer has this approach that they're going to sit down with an agent and the conversation is going to go, hey, I want to talk to you about how I can help you, improve your business, or how I can help you further your business in 2023. Well, without a plan, what they're really saying is, hey, listen, I want you to give me a deal so that I can close it on time and quickly, and I'll show you what I can do. When in fact, that's what we all should be doing anyways, right? And that's what we do. But what can we really do to help them grow that business? And so we sit down and we show them trends. We show them hot pockets of the market that might be, undervalued and overlooked. And then we're also able to show them trends that are coming in from cash sales, investors that are hitting the market. Who are the big hedge funds coming in, and how can you align yourself with that, or how can you avoid that? What's the Airbnb market look like, and what areas are coming under some sort of scrutiny with local government that may actually stop those Airbnbs from happening? So we bring a lot to the table, not just product and rate that I feel like maybe some of our competitors do.
Right. And so we always say KT is like the pro at the realtor meeting, right? Like he's always, look at that face, like he's got it.
Yeah.
So
Yeah.
It was that kind of like the reasoning behind setting up the Market Distillery, was to try to provide more value to those agents. And, is that kind of the motive?
Yeah, our motive was definitely to provide value, and then also be able to kind of forecast for our own business. It really started with when we bought this, I went out and bought a 10,000 square foot commercial building in 2017. And I was like, man, am I getting in over my head with this? Am I overbuying? I need to learn more about the market and what's going on. So we really delved into the local market and said, hey, what does the forecast look like for the future? Where are we currently? And then how can we navigate our hiring process around that? Last thing we wanted to do was buy a 10,000 square foot building and just fill it to fill it. Like we wanted to make sure we were filling it with the appropriate ideology that business is coming in the future. Now, no one could have predicted 20 and 21. That wasn't even in the forecast. However, we did start seeing a consistent net migration into Jacksonville. And that was a trend that we jumped on real early and often. Like, okay, there's room to grow. How much growth is coming, and what can we forecast as far as new housing coming to the market? And then what's our current inventory rate, and what does that look like? And when are those two things actually going to collide? And that's what we saw happen early 2020 before the pandemic even hit. And then it really accelerated during that time.
Yeah. And I know too, the Market Distillery has kind of evolved, and, you're doing some, I guess, partnerships with some universities in the area too, right?
Yeah, we've been real fortunate. University of Florida's College of Business, the Warrington College of Business, kind of came to us. One of the gentlemen that owns the Market Distillery is a professor at the University of Florida, so that helped to get our foot in the door. But when you think about academia and you think about real estate, we think of real estate in the manner of, essentially single family residences and beyond. In academia, it's just commercial. So they only have commercial stats. They only have commercial information. Residential is really just kind of a thought in the past. But what every university is looking to do is come up with something kind of like the University of Michigan's consumer sentiment. They're all looking for that next index that they can create to get put on the map. And so we started coming up with a relocation index specifically to Florida. We could do all states, but we had a concentration in Florida that we wanted to look at to track that net migration. And that was something they hadn't heard of before, nor had they seen. And they wanted to be a part of that with us. And they were able to say, we've got data that we think will help you, and you've got data that we know will help us. So let's commingle that together and let's partner up. So currently they are publishing our data, and we are working with them on that relocation index to where it's going to be the University of Florida Relocation Index, brought to you by the Market Distillery.
Yeah. That's awesome.
Yeah, we're super excited about it.
Yeah. And I know you said too, you were talking about expanding that beyond.
Yeah, we've had some other universities call. It's kind of one of those things, once one gets it, they all are like, wait a minute, like we don't want to be the one without. So we're starting to get other phone calls in other markets that you can kind of take a guess. They're all in the SEC and where it's coming from right now. And the goal for us is to be able to have this as a nationwide product, which is actually evolving rather quickly. It's coming much sooner than we anticipated.
Yeah. And how do you track that into, like, we always try to bring things into ROI and value and things like that. Like, how are you able to track that and how it affects your business and your production?
So like if we're asked to come to a speaking engagement and a presentation, it depends on how many people are in the room. But we've generally seen every time we do this, it leads to multiple contracts the minute we walk out of the door with people we've never even worked with. And so one of the interesting things for us is that, you walk into a real estate office, they're like, hey, no, thanks. We've got a preferred partnership, or, hey, we're doing good. Thank you. Something of that nature. They're calling us now saying, hey, we want the market distillery to come in here and talk to us, because we bring it in unbranded. It's not branded through Bank of England because it's not part of Bank of England. So when we come in there and do that, the gloves are off, if you may. And so what will happen is by the end of that presentation, other people are going, hey, what's your day job? And they're asking for it. So we're providing value, which is then in turn giving us an opportunity. When they ask us, what do? We kind of, at that point, tell them, and people gravitate towards that information because they're going, I haven't seen that before. And now I can provide that. This is stuff I can put in a newsletter. How do I get more information like this? So it does give us an option to really, I wouldn't say track the ROI, but we definitely get market penetration from that.
Yeah. So you're able to kind of use that data to push out a newsletter to your database and your past borrowers or people who maybe haven't closed with you, but they're in your database. And then you also can use that information to leverage realtor relationships as well.
Yeah, we have the opportunity to do those two things. Plus, people come to the site, they sign up for the service. It is a free or paid for service. And we have a lot of subscribers and a lot of people currently joining that. And then we do not only send out a newsletter, but we send out a 10-minute video breaking down the market each month of what's going on that is vastly different than what they would get from, let's say, their local MLS or their local association of real estate agents. We take it even a step further. And so we have people subscribed and signed up for that as well.
So if I'm a loan officer and I'm maybe in a smaller market, right? Mm-hmm. Obviously Jacksonville is a pretty big market. You've got a lot kind of within a smaller radius there than some other loan officers might. How would you kind of leverage that data maybe in a smaller market where those numbers maybe aren't as impressive?
Yeah, I would first start with essentially breaking down who my competition is. It's good to know who's in the top 10 in the market. And the reason I say that is you want to know what they're doing so that you can find a gap in the industry and insert yourself to be different. You don't want to do the same thing the other top 10 are currently doing right now. And so in this case, if someone's doing this in your market, you may want to evaluate, is this what I want to do? But if they're not, and it's a smaller market, it doesn't matter about how many listings there are. And it doesn't matter about what the days on market are. It matters, when you interpret that data. For example, if you have a smaller market that has, let's say, 3,000 homes for inventory, well, the question is that 3,000 consistently there? Do we have a drop? Are we having a peak? When you track that over a 12, 24 month, go back 36, 48 months, what does that look like in the month of December in your market versus the month of June? Some markets have seasonality. I'm also looking at in there, where are my price points increasing? And for example, is that happening in the new build or is that happening in the resale? Because we've seen trends where resales and new builds have come together and they're actually price per square foot is the exact same. And that's not normal. And the reason that's happening, as we explained, is because there's a lag in the construction and there's a lot of other constraints in the construction side that just aren't happening. And some builders are just hitting the pause button right now. So it doesn't matter how big or small your market is. It's, can you be the local economist of choice in that market? That's all that matters. And can you interpret that data?
Yeah. And KT, I'm going to ask you a question here too, because everybody says, oh, that won't work in my market, or my market's different, right? My people, whatever. KT's in a really interesting market, right? East Texas, a lot of blue collar workers, things like that. KT, do you think your market and your borrowers would respond to this kind of data and this, I guess, kind of high level of analytics?
Yeah, it's a good question. I was thinking that I was asking myself that exact question just moments ago. I remember, I think that times have changed. I've been in, similar to you, Quinton, I've been in business I just hit my 20-year anniversary in February. Yeah, thanks. And, the way that we communicate with our consumer market and and inside of this industry, even outside this, is completely different than what it was in 2003. And technology's come so far. Being able to capture data points has become substantially easier. I think the challenge that people have is just deciphering what's important to people in your community. So, in one, I think that there is a level of clientele that I would have personally that would be like, they're just kind of like a good old boy system.
Sure.
And my granddaddy did business, or my dad did business with you, so I'm going to do business with you. And it's just kind of creatures of habit in my community. However, it doesn't mean that we don't have our engineers and our, higher IQ, individuals that really rely on data to make informed decisions, across the board in the different categories. I'm assuming you got a lot of categories that fall under that, that market distillery,
Right.
And not just mortgage specific. Is that right?
Yeah. And, one of the areas that we see from a consumer facing standpoint, that kind of may help with this question as well is how many times do you get a borrower that they're going to work with you regardless, but they don't know that now is the right time to buy. Or statistically speaking, they think, you know what, we've read on the news is telling us these housing prices are going to drop. So we're just going to wait for them to drop, or that we think rates are going to drop. And so we're able to counter that by saying, well, what's your fear and why do you believe that, for example, the price of the home is going to drop? Besides the news telling you that, well, we're in a recession or we're high inflation. And we literally pull stats out going back to every inflationary cycle that can show real estate has been the winner every single time. Matter of fact, we can dive it down into your zip code and show you exactly what the appreciation rate has been through every inflationary cycle. So if that's your concern, that should be a win for you. So we really do, we can consumer face it as well, not just, real estate agent face it, if you may.
Yeah, that's a good point, because there's, people, all we hear now in the market is, hey, rates are high, it's terrible time to buy. But at the same time, we're up 15% from where we were a year ago. Housing's up 15%. That's crazy. But you have a lot of originators complain, oh, rates are too high. Well, no, I have a rate problem. No, you have a mindset problem.
It's just limiting belief problem.
Yeah.
No, and it's great when you have that question too, because with loan officers, you can say, hey, listen, or with borrowers, you can say, listen, if you really think rates are here, do you think you're the only person that thinks that way? There's probably 50% of the population that thinks that way. So the minute these rates dip, and they will dip, you're going to be battling 50% more competition than you are right now. So the price you think you're going to be saving, or the price that you think you're overpaying for, is going to be outweighed by this price increase, because the only person that absorbs the rate drop or the affordability in the market, it's always the seller. It's never the buyer. So the seller's just going to raise that price point. So, those are other things that we show, that sometimes we put out newsletters when we do our market update each month. We do put that out there and show what's happening with those particular cases right there. We show a lot to borrowers to kind of show them why now might be a better time to buy than what you think.
Absolutely.
Yeah. And I think too, I'm going to speak from my experience, and I'm 26. A lot of people my age, we love data and we love comparing things. And I think that's something that, we like to do a lot of research on our own as well. And having that data available in an easy to digest, maybe it's a newsletter or podcast or whatever, that's extremely valuable for someone like me who, maybe I just got out of college and I don't understand why interest rates are moving the way they are and why banks are collapsing and all this stuff is happening. Right. And I think, like I said, we like to, kind of digest that information on our own, and, maybe not as much of a hand-holding experience for a lot of those borrowers.
Yeah. Even for the loan officers that are out there, that's, we've been saying this, and Quinton, I'm sure you would highly agree. I think I heard you say it earlier, is we're in a position, and I've been saying this for a year, guys. Our biggest opportunity is education, right? It is, because people are so ignorant, because there's so much misinformation out there. And if you can get in a mindset of dominating the client experience and then leading with education, you're going to win in the marketplace, regardless of what rates are or anything. What I like about what you've said, Quinton, is you're taking data from a completely different perspective I've never even thought of. And I thought, oh, that's interesting. It's a different approach, which I think makes it so special, and it really doesn't exist. So I'm excited to hear what else you got going on and how that thing grows for you, and how it can help other, originators in the industry. Because, I always say the man in the land of the blind, the one-eyed man is king, the one that can see and have that data and be able to course correct and adjust and leverage it, to genuinely help people. That's how you win. So.
Yeah. And most of the loan officers in this business, they listen to Barry, right? Barry's phenomenal. He is nails it. I to this day, I joke with him. I'm like, dude, are you part of the Federal Reserve? Like, what's going on over here? Because the way he calls it is it's insane. But then to get local with that information, when you can couple what Barry's telling you and then dial it down to your market and see, is that the exact same? Is it more isolated into your market? But you can share that, because what's happening is all the loan officers right now are not regurgitating, it's the wrong word, but they're using that information, and that's what's going out to the streets. Still though, that's sometimes if you can separate or add to that and provide some additional value, you can really show what's going on in your local market. People they want to hear about it.
Yeah, that's so true, because you have, bigger metropolitan areas depending on what state you're in. And then you'll have a lot of like urban or rural areas that are completely have a completely different vibe. Maybe they have more stability, right?
Right.
Maybe, I know for years people were talking like in 2020, 2021, they're like, oh my gosh, the values have gone up drastically. It's 35% in my market. And I'm like, man, we're still flat over here. We're about the same. And then all of a sudden we were just about a year behind. Right. So then we got it late. And then I started feeling a lot of the pain that a lot of originators felt with, multiple offers and all that. That was foreign to me until 2022.
Yeah.
So,
we have a term for that. We call that the fight for affordability.
That's it.
There were people were searching for the fight for affordability because every market started jumping so quick, so fast. There were those markets that lagged, and those markets that lagged were kind of like the diamonds in the rough, man. People were jumping for those for that affordability. And that's kind of why you saw the whole curve kind of go like this and not just straight up.
Yeah. Yeah. Very interesting.
Yeah, no, absolutely. And for the record, I know you guys are associated with Barry and the team over there. Love Dan and Barry. They're great guys and talk to them quite often, and had Barry on my podcast as well. Great guy. I'm very, very impressed with everything he does.
Yeah.
Now, Quinton, let's say I'm a loan officer listening to this and I want to try to implement some data points into my business and that kind of thing. What would you recommend for someone starting out? If they wanted to go collect some data, like what data points should they be looking for and how should they go about that?
For me, the simple metrics that I'm going to look at right out the gate are going to be days on market. And I'm going to look at pendings. I think pendings are really important and highly undervalued. When you look at months of inventory, the way that's calculated is it has nothing to do as much with the amount of inventory coming online or new inventory coming on as much as it does pendings. Pendings are a leading market indicator of what those transactions are going to look at. Now, if your pendings are increasing, but the closing counts in the area are going down, that'll tell you something such as, hey, listen, we're having contract fallout. Why are we having contract fallout? Why are these homes not closing? Why is there a lag time? It could be a couple things that inventory needs to be, those homes under contract need to be fixed. There might be some undesirable things that need to be taken care of if your contract length starts to go further. If your days on market increase, that means you have a disconnect between the seller's value of the property and what the buyer's willing to pay. And sometimes that allows you to go in from an agency or going from an office of real estate agency, say, hey, listen, I know you want to jump right to price reduction because that's the thing to do. And you can actually look at the sales to list price and show that's exactly what's happening based on, is that increasing or going down? But let's take some logic here and see how we can make the seller a winner, the buyer the winner, and the community the winner. And that's when you can present ideas of the permanent buy down. And you can literally show them that 2% permanent buy down is much better than that $25,000 reduction they're getting ready to do. The seller saves money, the community holds its value, and then more importantly, the buyer has a lower payment. But I think that's really underestimated. That community holding its value, you can actually talk to real estate agents and say, hey, listen, 6 months from now, or 3 months from now, those comps that you're cutting the price on, those are going to show up in appraisals. And we may even have an appraisal conundrum if you keep cutting prices at this rate. And that's not your fault for cutting them. That's just the thing to do. That's what the normal thing has been to do. So if you could look at my two suggestions out the gate would be days on market and pendings, and you can create a narrative based on what's happening and actually go share that narrative as a form of education.
That's awesome.
Love it.
And I have one more question. As you're going through this, has any like data point or in your research, has anything surprised you?
Yes, the surprise I got was in the net migration and relocation into Jacksonville. I think I was programmed like a lot of people that we just took off because of COVID. And when we look at a 5-year look back, our takeoff started in 2018. And it did get accelerated, but it actually started in 18 with a significant growth, and it went through 19 as well. And then 20 was just an accelerator with 21. But those two things were happening, and we attributed a lot of that to the tax shelters, if you may. I know Texas has the same one. But I think that there was a cost of living aspect and a desirability based on the coast, and we're a waterlocked city. We are, I think Jacksonville, we love to say we're the largest city landmass wise. I've heard it all my life here, but the reality just means we just haven't grown all the way to capacity yet. So I think that those things were adding to that net migration. Plus, we're a huge military town, so you always have the Department of Defense moving in and out. But I think COVID said, wait a minute, my local government looks a lot different than your local government. And I like the fact that your local government is allowing people to work and allowing things to happen there. I'm going to move there where I can actually bring my income that I'm getting paid from work from home from, let's say, New York, which happened to be Washington, D.C., New York, were the largest net migration, states into Florida, specifically Jacksonville. It wasn't even close, but when they're bringing that income down here to Jacksonville, the affordability is vastly different than those two areas. So we started to see that kind of made me pause for a minute. And we were seeing those two states come in prior to COVID. That's what made me pause.
Yeah. Awesome.
Yeah.
Well, there you go.
Yeah, man. So it was good. KT, I didn't get to tell you this earlier, man. So I got a chance to meet you in February of 2019 down in Orlando.
Yeah, you look familiar to me. I remember the name a little bit even.
Yeah.
So, yeah.
I met you guys, and I was kidding with Brett. I was like, I love your story about why you started working out. And you told the class about that. Yeah, I thought that was great. And I had lunch with Shane, but you guys were great. And Daniel Halverson and I really appreciated that time at the Next Level Loan Officer. You guys did a great job, and we were very, very impressed, man.
Okay. We certainly appreciate that. And I appreciate you being on our podcast today. It's been a fresh breath air to hear someone else give, extreme value at that level. And you be able to dissect it and then communicate it on the LO level, right? That they can all understand. And I love everything that you said because it's so true. And, I think about, last year and all the California interstate buyers that we had. We had them from California. We had them from Arizona. It was insane the amount of people that were moving in, even into Texas. And then the affordability became a real challenge for people. And then you realize that 2008, when the market genuinely crashed and builders stopped building, and now you have millennials moving in, getting to the age of purchasing homes. We don't have enough housing.
It's incredible.
We've got a lot of work to do. And when you have higher interest rates and builders start tapping the brakes on things, you're like, whoa, don't tap the brakes, bro. Keep building. It just, so having this type of data, I think, is just crucial for a lot of originators when they are communicating in their local markets. And I do think you have to dial it in specifically for you, because I don't think it's a one size fits all. There's pockets, there's different, some communities are a little behind. Some haven't gotten there yet, so a lot of information. So I appreciate you sharing.
Yeah. Definitely about knowing your market. And, I always have some questions as well, if I could ask some, because I'm curious, because I got to give credit to Alex Stewart in our office here, who's one of the founders of Market Distillery. He is forecasting that Texas will be the #1 net migration state into Florida over the course of the next 2 years.
Oh, wow.
And his theology for that is that property tax and what's going on with the property taxes in Texas is that there's extreme pain going on in that market right now. Whereas in Florida, we have a moratorium that it can only go up 3% max per year.
Yeah.
You seen that?
Dude, that is so true, because I'm telling you, people's taxes doubled. Like,
for the record, I hate it when he's right. No, I'm just kidding.
Even me personally, I had some properties, and I fought 3. I won all 3 and was able to make a debate. But I'm knowledgeable. I'm not the norm. I come walking in there, appraisers are like, "Who's this dude?" And I was able to combat it and had the market data to support it. But you're so right. When I had customers calling me, and they're like, "Hey, man, last year my home value was, with the appraisal district, was 128. This year it's 228. I'm like, wow. And sometimes more. That's a big jump,
Huge jump.
Yeah. So the days of, hey, whatever the tax row says, in Longview, Texas, it's usually about 25% less than what the market value is. And that's not the case anymore. It's reverted the other way to some regard. So,
yeah, no, he's called that, and he saw that coming. And it's interesting because I think he said our local government looks a lot alike, and we both have water. So he's like, you definitely see that coming over here this way. So I thought that was interesting. Yeah. Well, no, I appreciate you sharing that with me.
Yeah. But now we don't have water like Florida has water, but we do have water. So, well, man, we appreciate you, man. We really do. What a great podcast, what a wealth of information, and we appreciate you sharing it. Brett, you have anything in closing?
Yeah, go show Quinton some love. What's Your One More podcast? They're dropping twice a week, right?
Twice a week on Apple, on Spotify. If you could leave us a review, 5-star it, that would be the most. And at minimum, check us out on socials, IG, Twitter, LinkedIn, Facebook, etc. We'd love to have you kind of follow us on that as well. But I really appreciate being on the show. Honored to get a chance to talk with both of you this morning.
Absolutely. And as always, join the Next Level community at becomenl.com, and we'll see you on the next one.
Hey, thanks, gentlemen. Appreciate it.
Take care.